Hey, we're back here again and talking about portable mortgages. So Trump came out with two ideas in the last week or two. The first was a 50-year mortgage and the second was a portable mortgage. And so a portable mortgage is a loan that you can take with you when you sell your home and buy another home. So instead of paying off your existing mortgage and applying for the new one at current rates, you carry your old interest rate forward. The concept is very common in Canada and parts of Europe, but it's not part of the United States federally backed mortgages today. The proposed idea would allow buyers to transfer their mortgage as they sell to the new property, keep their original interest rate, and avoid starting a new amortization schedule at the same time. They would maintain monthly payment stability in some cases. So the concept is just being discussed. It is not currently available in the United States lending programs. Why are they getting attention? Well, rates have been an issue this whole year. And many owners, current owners of homes, have locked in rates of 2 to 4%, which today is unheard of. And that makes those homeowners hesitant to sell, hesitant to move. And it doesn't make a difference if they're in a home that they thought they were only going to be in a couple of years, maybe a starter home. They're staying in that home longer rather than incurring and moving up and incurring a rate increase on their mortgage. A portable mortgage could reduce the golden handcuffs. You know, we're all handcuffed to our mortgage today when we have those really low rates. We don't want to leave. It could reduce those handcuff effects for letting more homeowners keep their rate, move without doubling their monthly payment amount, and allow them to upsize, downsize, or retire to wherever they would like to go. For current homeowners, this would be maybe an awesome opportunity, but we have to think about the trade-off of what we're looking at. So if the new home is more expensive than the current home, which oftentimes is the case when we're a move-up buyer, you may need a blended rate or a top-up on a second loan because you can't expand your loan for that particular rate you have. So for example, if I have a 2.8% rate or a 3.5% rate and my current loan is $300,000 and I want to buy a home that is $600,000 and I don't have $300,000 cash to go into that next home, then if I need additional financing, I can port the $300,000 loan at my low interest rate that I currently have. And then on top of that, I would need another loan that would sit with that, the top off loan. And that would be at a higher interest rate. Let's say today we've been using the market rate of 6.5%. So I would have a piece of my property at the lower rate and then the rest of it at the current market rate, whatever that might be. If you buy now and rates drop later, your loan becomes a long-term asset. So future portability would feel less risky at some levels. So there are some bonuses here. This would be a very different effect for the United States. We don't have anything like this right now. So you might see an influx of investors because they have these low loans and they might leverage that portable loan even more. They're more volatile. They move more often. So you might see more investors pop into the market that way. So that might happen. the velocity of the market would increase. So there would be a lot more movement. And with a lot more movement, that's going to push likely prices up. So for sellers, more people are going to enter the market. So that's a really good thing. You're going to have much more, like a higher amount of listing activity. And buyers might prioritize homes that are eligible for portability. So they might pick and choose their homes based upon the portability aspect, which would make a lot of sense. And there would be faster move up cycles. So the person who is in the starter home is not stuck in the starter home. They can move more readily. And I know personally a number of people that are just waiting. They don't want to give up their really low interest rate homes, but they also really don't want to stay where they are. And it is just a real struggle for them right now. So I can see the emotional aspect of a portable loan. I think there's an emotional aspect that maybe people aren't talking about, because it would really give an opportunity to that person who feels stuck today. And stuck is not a place that we like to sit. So I'm going to give an example. If you could move a 3.25% loan, and you had a current mortgage of $350,000, the payment would be around $1,520 a month, P&I, principal and interest. And if they wanted to move to a home priced at like $500,000, if portability existed, they would keep that $350,000 loan at 3.25%, and then they would add a top-up loan of $150,000 at whatever the current market rate is, which today we've been using roughly 6.5%. So there's some good possibilities here. It's a blended effect. And so they would also have some of that loan amortized for a lesser period of time as they move in to that. So it's a little more complex. It would maybe be something that people would really have to sit down with specific examples and walk through. It would be, in my opinion, a point where our lenders would really be even more important, the relationship with those lenders in the process of purchasing a home, because they would be relied on more for their explanations and their full understanding of the effect of all of this. So do I think that the portable loan is a possibility and a good idea? I really do. I'm excited about this one way more than I am excited about the idea of a 50-year mortgage. I think the 50-year mortgage holds so many things that appear like they might be really positive because they hyper focus on the monthly payment. And this one, I think, has such great advantages for the average home seller that and buyer that I think that this could be just a real gem. So I'm looking forward to seeing what comes of these discussions as we move forward. And I hope you do too. And if you are interested in just understanding a little bit more of how this might work with your own scenario, please reach out. I would love to chat with you. Again, my name's Lisa Weber with Realty One Group, and I like talking financing. I like talking houses and home buying and selling. So give me a call and keep watching my channel.